What's good, guys? Welcome back to the channel, and today I want to show you how you can use the economic calendar to anticipate how the weekly candle will shape and then use those information to find high probability setups within the trading week. First of all, we will take a look at the economic calendar and then combine those information to frame a bias how the weekly candle, the open high low close or open low high close on DXY will most likely shape, and then use those information to frame a bias and a trade setup on the respective foreign currency, for example EURUSD, Pound USD, or any other major currency which is involved in DXY. Now, as you can see here, I have opened up the economic calendar with the high impact events of the week for DXY, and the first thing you always want to check is the distribution of the news events within the week, meaning on what days do we have which kinds of news events. You want to make sure, okay, do we have one of the big three, meaning CPI, NFP, or FOMC? And if we have one of those within the week, then it's always going to be the most important one, and you especially want to frame your narrative around this one. For example, if we check now this week, you can see we have on Wednesday CPI, and then post CPI we have PPI on Thursday, unemployment claims as well, and then on Friday we have retail sales. So we can conclude we have the majority of news events from Wednesday to Friday, meaning that's where we expect the most volatility, and therefore we also expect the highest probability trades to form. So now, if you combine that, Monday and Tuesday, we might have accumulation, meaning a ranging market profile. Then heading into Wednesday with CPI, we could see a manipulation, and then post CPI on Thursday and Friday, where we have 8:30 news in New York session on both days, we then could see distribution, meaning expansion in price. So now, if we keep that in mind, right, we anticipate consolidation, manipulation, and then the expansion. We now try to combine that with the DXY chart. So now we have here the DXY weekly chart, and what we want to do before we get into the week, we want to frame, okay, can we anticipate a potential weekly bias for DXY? Now, as you can see here, the previous weekly candle was more or less a consolidation profile, and overall we are still in a bullish order flow, but you can see here now we have taken out the external liquidity of that range, and now price is just pretty much in a ranging market profile, meaning we don't really have a directional order flow on the weekly. So now if we mark out the most recent buy or sell side on the weekly, then we have obviously the buy side here, and we have the sell side below that recent weekly swing low. But now when it comes to bias, there's no way you can clearly identify if price wants to go for the buy side or if price wants to go for the sell side. Now, if you combine those information with what we just outlined on the economic calendar, that we will most likely see on Monday and Tuesday, accumulation and then a manipulation, we then want to use those information combined now with the bias onto weekly and say, okay, we want to see what Monday and Tuesday are doing, and then we want to frame a bias going into CPI and the rest of the week. Now, what we can do, we can now refine the weekly into the daily, so we have more insights to what price might want to do. And now if we check the daily, what we can identify here is, again, we are in a neutral order flow, right? You can see here, we swept this daily high, and then we rejected from the daily rejection block here. Rejection block on the daily, and we are back into the range. And now same thing here, we have the buy side of the weekly, and we have the sell side, and we also have on the daily, this daily sell side liquidity pool resting below that swing low. Now, once we have marked out the liquidity above the highs and below the lows, we now can focus also on the PD areas where price might be trading into to then see a potential reaction. So we have on the daily this BPR, right? We have a bullish value gap being overlapped by a daily bearish value gap, this one. And now you can see how price is retracing into this daily BPR after we have swept this daily swing low here. So now again, if we have a bullish bias, right, we want to see price getting above this bearish value gap and then using this level for a bullish inversion key level to then trade higher. But if we are bearish and we want to see price actually trading into the lows here, we want to see price respecting that fair value gap, meaning we don't want to see price to close above that fair value gap. And if you want to know why price should respect that bearish key level, then watch my video on how to read order flow. So now we have the new weekly open, and let's see how the weekly candle will be opening on Monday. Again, we want to monitor Monday and Tuesday, heading into Wednesday, and then we want to see ideally post CPI how the bias for the rest of the week could look like. We want to use the information from the Monday and Tuesday daily candles to then frame the potential narrative of how the weekly candle will close. It's always easier to anticipate the second half of the weekly candle than the first half, because we then have already information to work with and we can narrow down the potential scenarios how the weekly candle is about to close. So we have Monday, and you can see overall Monday was a bit of expansion, but we can see price is still trading within that higher time frame daily fair value gap. You can see no close above. And then again, Tuesday, you can see we swept the Monday range high, but still price wasn't able to close above that bearish fair value gap, right? So now heading into Wednesday CPI, let's drop down to the hourly. So now we have Monday and Tuesday being done. We can see previously on Tuesday we swept the Monday range high and then we traded lower, but you can see overall price is still in a range, right? So now as we are approaching the most important news event of the week on Wednesday, we now want to see, okay, how is price trading post CPI? And then we want to use those information to anticipate the distribution for the next few days. So we open up the Wednesday candle here, and there we have CPI. So now we can see CPI is pushing price up, and we trade again above the previous day's high, right? But now again, remember, we have a daily fair value gap here, so we want to see if the daily candle is now also able to close above this high, which would also close now above this fair value gap, or if this was just another manipulation. Remember, we have accumulation Monday and Tuesday, and then we have CPI, the first major news event, being the manipulation to then trap liquidity in order to see distribution lower on Thursday and Friday, right? So now what do we want to see if we anticipate this to be a manipulation? We want to see a daily close below the fair value gap, meaning we're respecting the daily key level, and we want to see price also giving an hourly change in order flow, which would be a close below here, right? This bullish fair value gap, if we now get a close below, we have an hourly change in order flow, which would then confirm that price wants to head towards the sell side, meaning this low and that weekly low here as well. So now all we have to do, we have to wait for Wednesday candle to close, and then Thursday and Friday we can look for trades in London and New York session, especially on the New York sessions, as we there have the high impact news being placed. And there we go. You can see now post CPI price closed below the fair value gap, meaning now we have a bearish inverse fair value gap here. And now we want to use this hourly key level as a higher time frame key level to look for shorts into the sell side. Also, if we wait for the daily candle to close, so daily candle is just closed, and you can see now, if we check the daily again, Monday, Tuesday, and the Wednesday candle, they all have been respecting that daily key level. We have seen a manipulation of both the Monday and the Tuesday high, and then post CPI we got the hourly change in order flow, meaning now again we had the accumulation on Monday and Tuesday. We have been anticipating by looking at the economic calendar, and then same thing with the manipulation. So now that we had accumulation, manipulation, what we can anticipate now is Thursday and Friday to be distribution, meaning expansion. So now we have the bias and we have the expectations of seeing distribution on Thursday and Friday. So now let's head down to the hourly again, And now all we have to do is we have to wait and see if we can frame now a setup within that narrative and bias we have determined. The narrative is to look for shorts from that hourly inverse value gap into that low and the one right below. So now we wait for the next day. We know we have high impact news in New York session on Thursday. So now let's see what price is doing. You could also already enter a swing short here, right? You could say, okay, I will simply short this high here, right? That's initial H1 week high we engineered. This high sweeps it, and then you simply put your stop above the key level, right? This high here, and your TP to this low, and then that low, right? So now let's see what the sessions are doing. You can see here with Asia already expanding lower, and then now we have London. In this case, we want to skip London session because we have seen expansion in Asia, and we know we have news in New York, so most likely London session will be consolidation or retracement to then again engineer liquidity for the news that are in New York session. So now we have London lunch, and now if we check the charts, right, what do we have? We have this London high, and we have this propulsion block, and we have the entire inefficiency here from the move in Asia, right? So now again, we have a manipulation above the London high, and now let's drop down to the M15 and see if we can frame now a potential trade idea within that move. So we still have the target lower, we have manipulation with London highs pre-news, and now let's see if we can identify a setup on the M15. So news coming out here, and we get another manipulation above that New York high, right, into the propulsion block here, propulsion block on the hourly. And now let's check the M15 and see, okay, how the candle is closing. Sweep into H1 key level. We close below this up close candle, meaning we have now an M15 order block here. And what do we have below? We have this bullish M15 fair value gap. So now what do you want to see? Again, same thing here. How to read order flow. You want to see price disrespecting the bullish value gap and respecting this bearish order block. And then once price is closing below that fair value gap, price should expand into the sell side. This low and then the low right below as well. So price is now retracing into the order block here. And now you want to see price selling off and violating this bullish M15 fair value gap. And there we go, we now close below. And now you want to see price expanding into the lows below, all right? And as you can see, we hit the first target, so we get some retracement. And then overall, we want to see price now continuing into the higher time frame target. We had some news here with Trump speaking, so we had some unexpected volatility, but overall, the price should continue with the higher time frame bias. You can see here, propulsion block was holding, fair value gap as well. We just had some wick here once Trump was speaking, but then you can see post the speech, price was continuing the higher time frame order flow. Now we have the next day coming up, and you can see price is about to hit the higher time frame objective. And then also, if you check the daily, you can see we even have another daily swing low as a target, being that one here. So you can see we have this low, that one, and then this as another target. And you can see on the next day, price gets another manipulation during Asia. So you can expect the continuation in London session. Why? Because of the session profiles. You can watch my video on session profiles. That's where I explain why you can expect London continuation and Asia making the high of the day if we get an hourly manipulation. And again, New York, open, high, low, close, right? We had again news, and then you can see price trading into the final target. So here we have the Euro chart on Wednesday, so post CPI. And again, we have determined the bias on the XY, meaning we want to see bearish the XY. Therefore, we want to look for longs or buys on Euro, right? We have this daily swing high, we have that one here, and we have here also final weekly swing high, meaning bias is bullish and those are the targets, all right? Then if we drop down to the hourly to determine a key level, then what do we have here? We have this fair value gap here, and on the H4 we also have this order block here. So that's where we want to see price retracing into and then continuing into the higher time frame targets. So now we wait again for New York session, right? Same thing here. You can also already enter a trade below that low and then put your stop below this hourly inverse value gap, the hourly key level. And your target would be around about 2R, right? You can use that high here. So that's where I took my first trade below that low. Invalidation was right around here. And then I was exiting my longs at the highs here. And then again, for New York session, I was waiting for price to give me another opportunity to go long. And what do we have here? We took out the high. We have dealing range low. We have the order block here. So now what do you want to see? If we get a pullback below that low, then we want to look for continuation longs into the higher time frame targets. So we sweep the low, and again we can long the same level, right? We can say, okay, I will buy that low. That's also where I gave a signal in my Discord. If you want to learn something and see all those things playing out live, then feel free to join. Currently the signups for March are open, and you can find the link below if you want to join. But yeah, you can see here, entry, then invalidation around 30 pips, and then first target, the high here, and then the final targets would be the higher time frame highs, for example this one, and then the final target would be even that high here for about 5R, alright? You can see here we had that a wick with the Trump speech, but overall you can see price instantly recovered and then went for the higher time frame targets. And that's now how the weekly candle is closed. And overall, next week I expect continuation into the buy side I just outlined in this video. And that also finished off the video. I hope you could learn something how I use the economic calendar in combination with the XY to frame my bias. And as always, I appreciate a like and a comment, and see you guys in the next one.